Let's dive into budgeting. Let's talk about this overall, right? We've got a bunch of different types of budgets. You could tie this into forecasting and projections for sure, but we're going to go a little bit more in detail with it in this particular lesson. There's what can we expect? Just a bunch of multiple choice questions asked about them. Flexible budgets, you could have a sim on that. We'll see a lot of that coming up. Well, effective budgeting procedures have a few key elements. These include management participation and budget guidelines. All right, so let's think about this. Management is helping to create these budgets, which are, hopefully projecting out how the year is going to look. We're going to stay on budget. We're not going to spend too much on Chipotle, hopefully. Saying that probably more so for myself, but maybe it applies to you as well. And budget guidelines, right? So how are we going to create the budget? Well, we got to have the correct people in there, and we need to have certain rules. A budget will typically cover a 1 year period, which that's not too groundbreaking, I don't believe, and include many members of an organization in its creation. You probably want the accountants in there as well as the people on the ground who are the ones spending the money, because you can't just say, hey, you're gonna, salespeople, you're not gonna spend too much money this year, but it's maybe how they make a lot of money is they spend a lot of money. So you want everyone in on the decision. Let's talk about those 2 points. We got management participation and budget guidelines. So management participation encompasses the individuals who work on the budgeting process. Generally, there's a budget committee, which includes individuals from senior management. This committee makes the final decisions regarding the budget. Now, you might remember we have a bunch of different committees from our corporate governance chart. This is one of those committees. Budget guidelines are provided by senior management based on the organization's strategic goals and long-term plans. These guidelines evaluate the current status of the organization and set management's tone for the whole budget. Now, I really don't have much to say about this. It's pretty straightforward. Here's where I would start to just talk about it, but take it as it is. No worries here. Some budget terms. Okay. You can see these in some multiple choice questions. Well, single-use plan, it's a type of budget, right? All these are types of budgets. And a single-use plan is also known as a tactical plan. What is it used for? It's used to apply certain specific circumstances during a specific period of time. Annual budgets are single-use tactical plans, right? So let's think about what this could be. We could have a budget drafted up, maybe certain use. Okay, we want to make sure that we keep everything under 5% growth of costs. So maybe there's another example where we want to make sure we have enough money saved up to buy a machine at the end of the year. This could be a single-use plan, right? It's just for that one particular use. The annual budget is a form of a single-use tactical plan. The annual budget is used to outline strategic goals for management and promote accomplishment of these goals. Right, this is just your normal annual budget. Nothing too crazy here, just takeaways. You want to know that the annual budget is a form of this single-use plan, and it outlines the strategic goals, but pretty straightforward, right? The annual budget is what the company is going to use for the year. Next, we have the static budget, and this static budget incorporates expected values about inputs and outputs that are conceived prior to the start of a period. So static budget is one that does not change. Flexible budget, we'll see, is one that does change throughout the year as things happen. So static budget, you make it, let's say, published on January 1st. Things change throughout the year, but you don't change this budget. It stays the same. Static budget forecasts revenue and expenses over a specific period, but remains unchanged even with changes in business activity. So generally, companies will update their budget, right? They'll update their budget and say, okay, this is what actually happened in the first few months. Let's update it. Nope, not a static budget. It stays the same. So this does not contain any actual data, just budgeted data. It displays budgeted costs for budgeted output. Whereas, we'll see with our flexible budget, we're going to have budgeted with actual. So budgeted dollar amounts with actual units. That is something we'll see. That's the difference between static and flexible budget. And then obviously the actual financial statements are essentially the actual budget. But at that point, it's just a financial statement. Awesome. On a roll here, right? Types of budgets, a little bit more here. Well, what is a master budget? This budget could also be called an annual business plan. This is due to the fact that it encompasses a 1 year period. And if right here we've got two types under this, we've got a lot of just, okay, these two are actually types of this budget, that just give you a little glimpse of what we got coming up so you're not too overwhelmed. Right? See, we've got a nice little graphic displaying which budgets belong in which category. So you will see this. You'll see this coming up. We've got operating and financial. These are both constituted within the master budget. Again, master budget has operating and financial under it. It is known as the annual business plan. It encompasses a 1 year period. Now, what are the differences between operating and financial budgets? And we'll go back to the graphic. We see here that these types of budgets are operating budgets, whereas the financial budgets are these two. Cash budget falls into that category, and pro forma financial statements, which are a form of budget, falls into that category as well. Sounds pretty great there. Just kind of some things to know. One fun fact that we'll talk about as well, again, that could be a multiple choice question, is that the cash budget is the last to be produced in the budgeting process. And then that's how you come up with the pro forma financial statements. You have all the budgets, and those flow into the pro forma financial statements. That's how you make them. These are just essentially budgeted financial statements. That is what we're looking at here. But I'm going to go back and keep talking about our types of budgets. Right, so the operating budget, this type of budget keeps operations moving smoothly. Right, sales, production, selling and admin. It outlines resources that will be needed and how the firm is going to acquire these resources. So think of this as cash flows from operating activities. This is my take. This is something I thought up of. Hopefully it helps. What I mean by that, it's not like official. You don't have to memorize that. Just kind of think about it in that sense. Got personnel budgets, sales budgets, all these types of budgets. Now, what about the financial budget? These budgets describe how funds will be acquired and used to further operations. Think of this type of budget as cash flows from financing activity. These are going to include pro forma financial statements and cash budget. Just some things to memorize, some things to take a look at. Right? Not absolutely groundbreaking critical, but I'd much rather you memorize your variance formulas, your CAPM, WAC, all of those good formulas before memorizing these, but this is something definitely get familiar. And I'm going to display this graphic after we go through our types of budgets each time, so you'll see it again. No worries there. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.